You see this little point right here? We see that there's a spike of volume, plus we get a spinning top candlestick formation. Hi traders, welcome to today's video. I thought that today we could discuss a couple of indicators that would really be useful to you in your trading strategies. These are three indicators that I've personally used for a while and actually find them very useful when making my trading decisions. So the first one that we're going to look at are the pivot points. Pivot points can really help identify turning points in the market, but we need to learn how to trade with them the right way. Trading with pivot points is the ultimate support and resistance strategy. It will make our support and resistance analysis completely objective. Pivot points are from the floor traders that used to trade in the pits, by the way. The way institutional traders trade is completely different to how us retail traders trade. Floor traders pick their ranges based on the previous day's price action. That is actually how they used to do it when they traded in the pits. Because of this, pivot points are universal levels to trade from. The levels that these pivot points mark off are levels that every single trader looks at, by the way, whether they plot the indicator or not. Traders that do use the pivot point system will attempt to identify the movement of an asset's price and whether that movement is likely to continue or to pivot in a different direction. Pivoting usually occurs around areas of strong support or resistance. So when we are looking at levels on our chart and we're trying to identify support and resistance, the pivot point indicator is actually completely doing that work for us. And we'll notice that once price moves past one of our pivot points, which you can see here in black, we will notice that it's either going to have a sharp reversal off that point or push right through it to the next support or resistance level. So our pivot point indicator actually calculates this by using the opening price, high point, low point, and the closing price from the most recent trading period. There are also a few different pivot point indicators that you can use, like Woody's pivots or Fibonacci pivots, but in this example I've always just used the regular pivot points, and so I will probably just continue using those as well. When you set your pivot points up as well, you'll see there's an option to either set daily, weekly, or monthly pivot points. Since we are mostly day trading, the daily pivot points are going to be the most useful to us. I recommend adding it to your chart, consider watching the levels closely, and see if it can improve your trading strategy in some way. So the second indicator that we're going to take a look at is the volume profile. I feel like every trader should have volume profile on their charts, whether they're trading a discretionary trading strategy or they have their entries and exits clearly defined. The reason I say that is because when we take a look at specifically the session range volume profile setting, so let me show you. You can actually there's many different volume profiles you can actually set to your chart, but I always go for the session volume. So this is only showing the volume for the current session. Now you can also have a fixed range if you want to see the volume of a specific range on the chart. You can also do the periodic volume or just the visible range. So when you scroll in and out of the chart, it's going to change the way that the volume profile is actually plotted and calculated. Anyway, with the session volume, it's giving me a good picture of every single trading day that's happened in the range that I want to take a look at. In this example, we have the Nasdaq chart open on the hourly time frame. The first thing that I will begin looking at is just the current day's volume, and see that the red line that we have going across the chart, if I just zoom in, is the point of control. A lot of the time when you see the prices kind of trade into this point of control, there's going to be a heightened amount of volume flooding into the market compared to other places. This is not the same as the pivot points, and so we don't really expect this to be a turning point in the market. It's just that this is where a lot of the traders are accumulating their positions. What this is telling us, because we know that the institutions and the bots take up most of the trading these days, the point of control line is basically telling us where most of the trading is happening, whether it's buying or selling, amongst these bots, these algorithms, and these institutional traders. That's the first thing that I look at. The second thing is I'm going to look at the peaks and the troughs, basically around the highs and the lows of each trading session, and just take a look at what the volume has done there. Now, if I can actually notice something quite important already. If I take my rectangle, You see this little point right here? We see that there's a spike of volume, plus we get a spinning top candlestick formation. I'm going to draw my line across here because now what I'm expecting is if we see price retrace into this level, I can expect there to be some sort of volume going in there. And because we've traded above that level for quite a long time, I would expect most of the volume to be buying pressure actually. If we now take a look at the top of the previous day's high, I see that there's actually quite a bit of volume around this area as well. Now this actually spikes out quite a bit, and if I draw a vertical line at the peak of that volume, which is here, you can see that it's pretty close to the point of control volume. Now that's telling me that if we can actually see that price moved very much into this level in today's session, and we had a ton of selling pressure come in and the market turned. So when it comes to using volume profile, you don't have to use it to dictate your decisions, but I say the best way to use volume profile is if you identify these specific points where there's heightened volume in the market. For example, this area here and this area here. If we're trading around this area specifically, and my trading strategy on the smaller time frame is giving me a long entry, because we're trading around this area, which is a heightened volume area from the previous session, I may want to relook at if I really actually want to take that trade at that specific time. Alright traders, the final indicator that I like to use on my chart is the average true range. Very simple indicator, and it can be used in basically two different ways. The first way is we're going to use it to set stop losses and profit targets, and the way to do that is we look at whatever our average true range is at that specific period in time. If we take our position and we see in this example on the hourly chart for Nasdaq, we have an 84 average true range. So if you're using the average true range to set stop losses and profit targets, you may, for example, set your profit target at 84. You're probably going to set your stop loss a little bit less than this because you're going to have a high probability entry zone based on your strategy for lower time frames. But for profit targets, you can use one, or even you can take 2 times what the average true range is. The second way to use the average true range is going to be to identify periods of consolidation and to identify periods of heightened volatility. In this example, I see that we have a sell-off here. We can see that pretty easy on the chart. And if we look at that in correlation to our ATR, you can see how the ATR is rising in value. We don't have to, when we use this indicator to identify the high volatility in the consolidation periods, we don't have to look at what the actual value of the indicator is, but we look at what the trend of the indicator is. If the indicator is rising in value, it's telling us that the volatility is rising as well. If it's sitting flat or moving downwards, the volatility is decreasing, as that period has a lower range each time an hourly candlestick forms. So, of course, as day traders, we need high volatility to take our positions. And what the ATR is going to tell me in this case is that at this period of time in trading, of course, if I was taking short positions because the market has declined, but in this specific point, the market has had heightened volatility. And so as a day trader, this is perfect for me. Those are just 3 indicators, traders, that you can add to your charts. I've used them for quite a long time, and I find that they add a lot of value to my trading strategies. Whether you use these strategies to take positions or just do your analysis each day, if you do it with intention of knowing exactly how they work and knowing what you want these indicators to give you, I'm sure that they're going to add a lot of value to your trading. This is just one example of the many strategies you can use at OneUp Trader. In fact, there are no restrictions on how you can trade with us. If you have what it takes, then you can be fully funded within 15 days after signing up. Look through the various testimonials, trading interviews, and funded trader withdrawals on our YouTube channel. You can find everything you need on our FAQ section, and you can speak to our support team, which is available 24/7. Track your trading performance using our advanced account analytics feature. Discuss trading ideas with other traders on the members area and Discord trading room too. Don't risk your own capital in the markets. Rather, prove your trading ability with OneUp Trader and enjoy a risk-free funded trading account. Click the link below or go to oneuptrader.com to find out more.